It's Thursday, November 11th, 2021. A lot to talk about today. There is no doubt in my mind, I'm sure in your mind also, the destination for this economy is a collapse. We continue to get more bad news. And I want to share some of this news with you today. Please comment down below. Would love to know your thoughts. But I truly do believe that the destination for the U.S. economy is a massive collapse. How could it not be? There's so many things, so many crises. You got a bond crisis. You got a shipping crisis. You've got an energy crisis. You've got an employee labor crisis. It's one crisis after another as we are really watching this inflation crisis get out of control. But multiple crises across the board. We've never, ever seen anything like this. And a lot of this is happening globally too. But I want to start with this first article on CNBC. Jobless claims hit another health crisis low at 269,000. So this was apparently the good news that now we're only losing 269,000 jobs weekly. So that's 269,000 Americans filing first-time jobless claims last week. Now, we have people refusing to go back to work for multiple reasons, and we have another week here with 269,000 people filing jobless claims. How is this all going to play out in the not-so-distant future? How do we have an economy? How do people afford to pay rent, mortgages, auto payments, college tuition, credit cards? How do they afford to pay for all this when they're either not going back to work or they're losing jobs? Very interesting. Love to know your thoughts. Comment down below. Another thing that was interesting today is dollar index up, gold up, silver up. Typically, when the dollar index is up, you see gold and silver getting hammered. Today, gold, I saw over $16. Right now, around, where are we at? $1,862. Silver, up around 54 cents today. Higher earlier in the day, but it's holding over $25 an ounce. And I can't stress enough the importance of owning these metals, especially gold. If you can't afford gold, a lot of people will go out there and go, gold's too expensive, I can't afford it, then go buy some silver. But you should have some of this put away, because I'm going to tell you, in my humble opinion, the worse things get as inflation continues to soar, it is going to be good for gold and silver. And I know people are going to disagree and say that you should be buying things made of paper. I think right now is probably the most important time in our history to be holding real assets. And the two most undervalued assets on planet Earth right now are physical gold, physical silver, not mining stocks, not pieces of paper. It's physical gold and physical silver. I want to share an article today that was on the hedge. And this is just another reason of why all of us need to be protecting ourselves with hard assets like gold and silver, putting some cash away, and really getting ready for what's coming. Personal ATMs are back. Homeowners tapping into equity in biggest drawdown since 2007. This is a massive red flag, ladies and gentlemen. Red flag. After 18 months of exploding real estate prices, U.S. homeowners are tapping into home equity rates not seen since the beginning of the credit crisis, and we saw what happened back then. According to Bloomberg, U.S. homeowners withdrew $63 billion in equity from their real estate holdings. There were more than 1.1 million cash-out refinances in the second quarter of this year, the largest quarterly drawdown since mid-2007. I don't know how to be any more clear, but you talk about history rhyming or repeating. There is a perfect example right there. This really truly is a red flag, and this is really concerning. Around 20% of American homeowners said they pulled money out of real estate investments in the last year. Another 18% said they're considering doing it. So what do they need the money for? There's a list here, And I'm going to share this with you. 42% said they pulled money out of their homes to do home improvements. Okay, that's justifiable. 27% said they used it to invest in opportunities. So I'm sure a lot of people pulled money out of their homes to invest in cryptos and into the stock market. And I pray to God that it works out for them. I really do. 26% said they pulled money out of their house to pay debts. That's a large percentage of people using to gamble in the stock market, in cryptos, and a large percentage just pulling money out of their homes to pay debts. 23% said they wanted to take advantage of interest rates. 21% said they needed additional cash for everyday purposes. That's interesting, such as maybe eating, putting gas in the car. 18% said they needed to pull money out to make a large purchase. Boat, an RV, a car, a second home, jewelry. You know, a lot of people now in the Rolex craze. And so, you know, maybe you needed to pull out 20, 30, 50, maybe 100,000 for your watch. 18% pulled money out for medical expenses. 18% pulled money out for unseen emergencies ahead. So wanted to put some cash in the bank because most people don't have cash. So they had to pull money out of their home ATM to put some cash away for an emergency. 17% said they pulled money out of their home to help a friend or a family member. So a lot of this to me is very questionable. I don't think, I mean, I could see refining your house, take advantage of the interest rates, maybe pulling some money out to improve the property. But a lot of this, very, very questionable to be pulling money out of your home for many of these reasons. What happens to these households when prices come down? This will be a problem. When you're using your home as an ATM, and we saw this back in the day, I remember a lot of people taking money out of their homes to buy properties in Lake Havasu and second homes in multiple places in the country. And then all of a sudden the market changed. And now they were on the hook for this money. And while the value of the property went down and they tried to sell, they couldn't because they'd borrowed money out of their home using it as an ATM. And so these people, I don't think, understand that this money has to be paid back. And people are borrowing money out of their homes, believing that the market will just go up forever. You have to ask yourself, what happens when it doesn't? You're on the hook for this money. And now these people will have a very, very hard time selling their homes because they're going to be upside down. This is more big trouble, ladies and gentlemen. Again, history does repeat itself. Wolfstreet.com, dollar purchasing power plunges. Inflation up 6.2%. For urban wage earners, it's up 6.9%, highest in 40 years, most monstrously overstimulated economy ever. You know, the Fed has been saying over and over, again and again for 7 months, that inflation will slow down. It's going to go away. That inflation is temporary. The Fed had its foot on the accelerator now for years. And every step of the way, the Fed is grossly underestimating inflation, ladies and gentlemen. They believe, or they want us to believe that they believe that it's temporary. It's not. And they've been doing everything that is going to continue to promote more inflation, not make it go away. And so again, they've underestimated inflation, and the Fed and Jerome Powell have unleashed a monster here because all they have done is print more money, keep interest rates at zero, and they've had their foot on the accelerator for a very, very long time. And let's be honest, their foot has been on this accelerator since 2008 and the housing crash back then. Nothing got solved, nothing got fixed. All they did was bring in more QE, more money printing, more debt creation, 0% interest rates. And look, it was a great time for a lot of people, but there's going to be a huge price to pay for this irresponsibility. Nobody wanted to put an end to the party. Nobody wanted to stop the music. And sooner or later, the markets are going to correct themselves with or without the Fed. The hedge today, a record 111 container ships anchored off Southern California as congestion crisis worsens. For the past couple days, I'm hearing people on television say that things are beginning to correct, that things are easing up. But now we're at 111 cargo ships. They continue to keep piling up. You know, if you're one of those ships out there, the 109th, 110th, 111th ship, you're probably going to be sitting off the coast for months at this point. It's unbelievable. Let's talk about another article, energy costs. People living in the beautiful state of Maine, Mainers likely to see rate that they pay for electricity increased considerably. This was alarming. The Maine Public Utilities Commission recently provided possibilities about upcoming power rates to the Maine legislature. Agency spokesperson Susan Falloon said a majority of Maine residents could see their rates go up between 60 and 80%. Yes, 60 to 80%. This is a $20 to $53 per month increase for a typical household in the state of Maine. I don't know how people are doing it right now, and I don't know how people are going to do it because they're already telling us that energy prices are going to soar. Over 25% of college degrees have a negative return on investment. Look, I think if you want to be a debt slave, go get a college degree. I also think that there are people that definitely do need a degree. The money is well spent for a degree in certain sectors, but you really have to ask yourself the career choice that you are choosing. Is this money going to be well invested? Are you going to get a return on your investment? Over 25% of people are not, and they're going to be debt slaves for their entire lives because they're going to be on the hook for $60, $80, $100,000, which is incurring interest. And when you look at low-paying jobs and inflation, how in the world are most of these people ever going to pay this kind of money off? And we see older and older people today in their 50s and 60s, 70s with college tuition debt. So you do not want to have this lead anchor wrapped around your leg as we fall deeper into a very, very bad economy. Zillow sells 2,000 homes in dismantling its house flipping business. They sold it to Pretium Partners, I think out of New York, Pretium Partners, more institutional money. So the average consumer, average home buyer didn't buy a home from Zillow. Institutional money bought it so that they can rent it to you. We're now watching a time now in our history where more and more people are going to be forced to rent. More and more people are going to be forced to live with other family members. I cannot tell you how many cars I see in driveways. 4, 5, 6, 7, 8, 9 cars in a driveway out here, ladies and gentlemen. It's not uncommon. After announcing an end to its iBuying business, the company said it would be selling a backlog of 18,000 homes, either purchased or under contract, at a likely loss of $500 million or 5 to 7% below the purchase price per home. Exactly where and when these homes go on the market is not clear. It appears that the company will seek institutional buyers. So more big Wall Street money getting in the housing market, pricing you out. But I truly do believe that what this is doing is just inflating the bubbles even bigger. And I believe there are going to be humongous losses in the housing market. And look, these companies more than likely will be bailed out when the bubble bursts. The average American will not be bailed out. So if you're looking at a house today, I would really emphasize that you are buying in one of the most inflated bubbles of all time, my opinion. I want to close with this last article from Michael Snyder. They have lost control. Our destination is economic collapse. He says in the article, did you really think that they could create, borrow, and spend trillions upon trillions of dollars without serious long-term consequences? Ask yourself that. How is anybody going to be shocked when this whole thing implodes? How would you be shocked when you wake up one day and see the stock market crumbling? The experts that we trust put us on path for this. And now people believe that the same experts that put us on this path, the same experts that thought it was okay to spend trillions and trillions of dollars and print trillions and trillions of dollars out of thin air, all thought it was okay. People believe that these experts have the solution and can fix this, ladies and gentlemen. This is how confused a lot of people are. If inflation continues to rise at 1% a month, we're going to be in double digit inflation here in America very, very soon. According to shadowstats.com, John Williams, the real rate of inflation today, as I make this video, is close to 15%. Now, he's calculating this back with the 1980s formula that they used before they manipulated the way that they formulate and calculate inflation today, okay? But this is how we did it back in the early 1980s. If we use that same calculation, we are around 15% today, and that is way more accurate. This is what happens when the system cannot stop spending. This is what happens when people, the average consumer, cannot stop spending. Both now have record debt. We're looking at record national debt in America. We're looking at record household debt in America. And we are sitting on record debt at the worst possible time. I think that we are getting very, very close to entering a Great Depression here in America. And as America sits on massive debt, the system debt, the household debt, this is going to prove to be detrimental for our country, for the average consumer. Get ready for our new destination, America. It's going to be an economic collapse. You won't believe what you're going to see, and I believe that we're going to see a lot of this in 2022. So as I leave you today, there's a few things we can all do. People go, what's the solution? What can I do? Well, first off, you can maybe buy a little bit of this. Oh, it's too expensive. Go buy a little bit of silver. You could shut your television down. That would be a great idea. You could read more books. You could read history. You could buy gold. You could buy silver. You could get a side hustle, 2 side hustles, 3 side hustles right now. You could buy food. You could buy some water. You could put some cash away. The system, ladies and gentlemen, is not your friend. So get prepared, because I believe that we are going to see this meltdown really begin to unravel in 2022. It's happening right now, right before your very eyes. Anybody that doesn't see it is blind to reality and the truth. If you see what I see happening right now, well, you're detaching from the system. You're probably getting some money out of the bank. You're probably buying some of this, buying some silver, putting some cash away, and you're being very, very patient. People want this thing to implode tomorrow. Look, I don't want to see this thing implode, period. I don't want it to happen tomorrow, but you know and I know it's going to happen. And the longer we wait, the worse this thing's going to be. They have printed so much money, created so much debt. This thing is going to be so bad because they have kicked the can and put it off for so long. This is why it will be the worst collapse in history. So as I leave you this evening, walk close to God, say your prayers, thank God for everything that you have, and continue to stay on course and prepare. Look, I pray nothing happens. I'm a realist. I know that something's going to happen because it's already happening. Prepare, ladies and gentlemen. Prepare.